The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the November 22nd. Wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I can make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. If you can't dial in, let your fingers do the walking. You can always send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question. Of course, inside the Tigers done well. Any ping will do. So let's go ahead and get this show started on our pre-Thanksgiving Day meal out there. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading down 69 points at about 23,522. S&P's up 2. NASDAQ 100 up 4. Russell's up 1 point. Semis are off 8. You've got gold is up $10, probably the biggest mover, up 0.8%. Silver's up 15 pennies. So we'll go check in on that, get a feel for what it is doing out here. Leading the charge dollar-wise, the upside, you've got Amazon, the amazing one, up 1 3/10% or $15. AutoZone up 6. Baidu up 6 and change. Priceline up 6. John Deere up 570. Sage Therapeutics up nearly 6%. To the downside, IPG Photonics off 3% or $7. iRobot down 8%, nearly $6. I don't know that I should pronounce this one. Baozun, B-Z-U-N, probably a total mess up there. It's down 14% or $5. Or Mercado Libre, that's down $4. Of course, I want to look at what you want to look at. But for the moment, let's go look at gold. We'll go to the markets out here, but it's up the largest. Well, light sweet crude actually is up the largest percentage-wise. That's up 1 6/10%. But let's look at Goldilocks. Of course, that doesn't require us, but it will mean that you and I should go take a look at the yen. Now, for those of you, if this is your first time listening early in here, you might say, "Well, I thought you were going to look at gold. Why are you even mentioning the yen?" Well, first, let's go check on the yen to see if we should even mention it, and that would be looking at the correlation, the directional correlation between these two instruments. Now, this is a 10-minute time frame chart out here for both instruments, and directionally, you can just see how well tied together they are. I mean, these two can go on to a dance floor, and you would think that it is one and the same for the most part out here. So we can see that the last move out here really inside the yen began at about 7:30 this morning. It has been moving for the most part directly higher, incrementally higher, and so too has Goldilocks. So these two are still stuck together, and we just like to look at a short-term chart just to prove to ourselves that, hey, the correlation is still there. Because if the correlation is there, we can look at one and get a feel for what the other may be communicating. Now, you have to decide who's the dog, who's the tail. My presumption is that the currency market, because it's much larger than the gold market, is the one that's wagging the dog. Now, I use the yen futures contract just because directionally we don't have it. It matches perfectly, and also on my system I don't have a delay with regard to the yen futures. So we're going to go take a look at the daily chart for the yen futures out here. You're going to see a nice wide bar. We talked about this a couple of days ago, yesterday probably, because today's Wednesday. It was Monday or Tuesday, and what we had identified out here is one of these Tom DeMark 9 setup counts out here. This is a nice wide-ranging bar. What we had taken a look at was that this bar had not traded into bars 5 and 6. In fact, it was 2 days ago that we were looking at this. And what we suggested, what we concluded was, hey, that pullback on November 20th, there was nothing to it, because typically when you get this 9 count and the 9th bar, that means by 9th bar, if you're going to try to do this at home, you're looking for 9 consecutive, in this case here, because moving to the upside, 9 consecutive closes where the close of the current bar is above the close of the bar 4 bars ago. I know that sounds like a lot, and it's one of our callers from Dennis, Massachusetts, yesterday, who was trying to learn this system on the Thinkorswim platform. By the way, if you are still listening, I've been told that on the Thinkorswim platform, I don't use the Thinkorswim platform. I'm not saying don't use it. I'm just saying I don't use it. That tool that you're using does a good job of the 9 counts. It does a thing of its own in the 13. It's not identifying those TD sequential counts out there. At least that's what I understand. But taking a look at these 9 counts out here, we suggested that because bar 9 did not trade into bars 5 and 6, momentum should continue to move higher. In fact, that's what we are seeing right now. Now, the cool thing here, and when we take a look at this chart, we can see where the real resistance is. It's really this dark cloud cover candle session from October 16th. So if in fact the yen is able to take out that high, this might be something that you want to take a look at, even though we won't be trading the U.S. markets out here tomorrow, and we will on Friday. We won't be doing live broadcasting. And if you are in the gold market, you'd like to see the yen close above that high, the high of October the 16th out there, and that is at 0.8980. Why? Because once price gets above that, in theory, we'll have to see if it works out in practice, but in theory, there is no resistance, meaning that the yen futures should then run all the way back to the prior swing point. We're always looking at swing points, or if we can see some type of bullish or reversal, a bearish candle out there, we'll use that as a area where the bulls or bears are staking themselves out. And when they get overrun, just like in a war game, so to speak, or football game, you know that defensive line has failed to hold this case here, price, just trying to do a little analogy, if you will. So that's what you'd want to watch. Now, why is that important for us to take a look at? Because I think what that does, that really sets up what it is that we would be looking at inside of Goldilocks. So if the yen is breaking out, and right now, other than that dark cloud cover out here, I would have to say to you, this is breaking out to the upside. But you want one more last piece of information inside at least the yen. Now, gold has a mind of it. It's only a directional correlation. So while the yen clearly appears to be breaking out, or we'll just say clearly is breaking out, that's not the case when we take a look at Goldilocks. Why? I don't know. I just know that it isn't, or it does not appear to be. And you might say, what do you mean, jelly bean? We are getting into that season out here. So when we come back from this break, well, I'll check to see if somebody has sent me an email or two, but we'll go take a look at Goldilocks and where it's headed to next and where its breakout would be. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee.
See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
I'll meet you halfway. That's better than no way. There must be
Now, that's not a tune I recognize, but that was David Cassidy. His passing, obviously, last night. What a bummer. Hey, so let's go back to Goldilocks out here. And gold is about to, so, we're talking about, and we didn't take a look at the end futures. We could do that, take a look at their profiles and see what we see. But we're just going to focus right now on the 4-hour time frame chart for gold. And the reason that we're going to focus on it is price is getting ready to run right into resistance. Now, resistance here, one resistance area, and that is going to be the top of its TAS market profile on a 4-hour basis. So 1297.40 is the number. We're at 1296.90. So we're going to see that, or we should see that, during the show out here. Now, the structure of that box is bearish. You might say, what do you mean Willis? And what Willis means out here as we go ahead and we turn off prices, if you look at the actual box itself, it's got 3 lines, red, blue, or cyan, and green out there. And what you want to focus on, one of the things you want to focus on, because there's several, but one of the things you want to focus on is where's the center line, that's that cyan color, where is it in relationship to the top or the bottom? If it's closer to the top, it tells you, it's like you've got a very strong defensive line right there. And what that would help you to identify, so this is where the snipers in the gold contract, those that would be traded on a 4-hour basis, are hanging out. And so therefore, if price is able to take out that area, that's a very bullish meaning to you, just like you would anticipate that this is going to be resistance. Now, does resistance mean it just turns back down and that's it, the move is over? Not necessarily, but what I want you to know is that in taking a look at this time frame chart, that's significant resistance. Now, this chart here, we don't show the price. I'm just showing the different market profiles, and you can take a look at a rising channel line, a rising price channel, gradual, albeit. This is the 4-hour chart. So if price breaks through the top of this red line, 1297.40, I would anticipate that price is going to get up to the top of that channel line. We'll put price back out here. The bottom of the channel is the one that has really been tested the most. So we may just be trading in this diagonal, lower left to upper right, sideways-ish trading range out here. But you'll see on these charts here, we've got the rising price channel on all of the different time frames. Now, here's the interesting thing. One might say, well, if price breaks above the channel line, it has broken out. And actually, that's technically speaking, that would be improper terminology, just like the bad grammar that I use many times when I'm speaking. But the reason is because it's already in a rising price channel. So if price breaks out above it, it's already rising. It can't really be breaking out. Now, you could say it's breaking out above a resistance area, but the real resistance area that Goldilocks needs to break out of in order to really get bullish out here is going to be 1322 even Steven. And that is the top of the weekly profile out there. Now, the weekly structured box, as you can see, it is slightly bullish versus slightly bearish out here. So if you put the weekly time frame chart out here for gold, you're going to see that this thing, in essence, well, quite frankly, one way to look at it, really since the 2015 time frame, has been making, this weekly chart has been making, in essence, higher lows out here. So like 1322 would be the breakout. Now, if we go put the yen, let's just do this and see what the 240-minute profile looks like as we put up the Japanese yen futures out here. And they have a different set of profiles. So perhaps we get to see who's the dog, who's the tail now. Here we can see that during the last 4-hour time period, price is broken above it. Now, that was not a bearish profile inside of the Japanese yen out here. Has the Japanese yen broke out? The answer is it has. So if we take, you might say, well, how'd you reach that conclusion? Well, if we take a look at this specific week, so Friday is the day. I won't be with you, but for those of you that are trading, that are kind of searching for bottoming signals in gold, knowing that you've got this correlation going between the yen and gold out here, what the yen has actually done, this yen futures, I should say, what the yen futures have done this week is formed a brand new weekly profile. This week. And price right now is trading above the top of that box. The top of that box is 0.89513. So if we go back to this chart here for the yen, the daily chart, wide-ranging bar, TD setup, we're moving higher. You know, all it has to do is take out the highs from October 16th. Looks to Stevie like this is already broken out, just waiting for the last-minute confirmation. Well, Friday, at Friday's close, you'll know. Because if price is closing above the top of that box, 0.89513, that's telling you something. And perhaps you may want to go ahead and take a look at correlating that to your decisions inside of Goldilocks. So let's take a look at gold. That's taking a look at the yen. And that probably was ad nauseum. But it's a quiet market. And so I'm sort of struggling to really come up with things to chat about with you. Although there was a request I see earlier in the den. Let me find it. SR, can you look at natural gas and UGAZ? I can, Mike. Now, natural gas, I don't trade it, but what contract is it that is active right now? What is it that is? Because we've got to really take a look at. I think it's. Actually, I don't. I think it. Why do I think? I just got to ask. If I ask inside the Tigers Den, somebody is certainly going to tell me. Now, where is it? I've got his January. January, is that what everybody else has out there? I don't have any takers. So we're going to go with January. We take a look at the natural gas contract. We'll do the same type of thing out here when we take a look at what's going on with regard to market profiles. Now, in the case of the natural gas contract out here for January, basically looks horrible. You know, no other way for me to put it than looks basically disgusting, horrible. Now, I'm looking at a 60-minute time frame chart out here, and we're going to use those same market profiles. Now, look, I'm going to go ahead and turn back time. Actually, what I'm going to do is really just turn off price. And what you're going to see is a brand new profile that formed during the last hour, and really useful information to us. Now, what I will say in interpreting these profiles is that the bottom level of 3.05 is very strong support. And the reason that we say that is you don't see a center line, do you? The center line happens to be also at the bottom. So that's really helpful for those that are trading this. Now, resistance has been 3089 out here. That's resistance. If price could close above that, that could signal on a short-term basis a change in trend. At this stage of the game, what we know during this 1 hour time period is that price hit that and it has moved lower. Now, if price takes out that really important bottom, I say important because it should be very bullish out here, that's going to tell you something, Mike, about natural gas, and therefore trading UNG, what were the instruments out there? UGAZ. And so you really make your decisions, even though I'll put up UGAZ out here, make your decisions based upon the contract. Now, UGAZ may have 2 futures contracts in it. I don't know, but you'd want to go ahead, Mike, and take a look at what is inside of this 3-time long natural gas ETN. But the profiles here, not as meaningful as the ones on the active contracts. When we get back from this break, we're going to go out to Paul in San Jose, and I believe we're going to look at the Great British Pound. Steve Rhodes with TFNN. Be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back. Let's go out to San Jose, California, speak with Paul. Paul, thanks for calling. Thanks for holding. How are you doing this morning for you?
I'm doing great. How you doing, Steve? Happy Thanksgiving, buddy.
Thank you. Same to you. I was through your area a couple weeks ago as I was coming back from Pebble Beach, and I think Highway 17 or 35, some windy road through the hills in order to get back to San Francisco. Are you a native of San Jose?
Yeah, I'm born and raised here in California my whole life, and went to school down in San Diego, but now I'm highly considering moving out to where you guys are at, the Clearwater area. Possibly Austin, Texas. I got family out there too, but I don't know.
Well,
I love California, but the taxes and everything else is just a little too much.
Well, the question is, if you're going to move east, the question you have to ask yourself is, what are you going to do with all your free time? Because you won't be in all that traffic that's out there.
Oh my goodness, you're telling me it's horrible. I can't believe it. It's just in the past 3 or 4 years, my city it's insane, the amount of people that are here. I can't believe it.
Yeah, absolutely, absolutely. Now, did you want to take a look at the Great British Pound? Was that what you wanted to look at, or?
Yeah, I want to take a look at this pound. I see that it's kind of breaking out of this consolidation it's been in for the past several weeks. But last time it was up at this level several weeks ago, it got hammered back down to about that 130.
Are you in it, looking to get in it, thinking short? Tell me what you're kind of thinking.
No, I'm thinking long, but I'm maybe a little bit of a pullback before I take it long. But I wanted to get your opinion on it because on the daily chart, there's some pretty wide-ranging bars to the downside at the top of this range.
No, absolutely, no question. And if I just simply put this daily chart out here with its market profiles, now I'm just going to look at the futures contract just simply so that we're looking at very active data out here. You're looking at that one wide-ranging bar here from November the 2nd, and it's really kind of right up into that supply area. And no question that if it could clear the top of the October 13th level, then it looks to me like it would go ahead and make a run for the highs. Now, the highs I'm referring to are September 20th. Now, it's doing a really nice job of suggesting that it wants to break out, but it is going against that wide-ranging bar. The reason I say it's suggesting that it wants to break out, it's above the daily profile box. It's been like that for the last 4 days, so that's a positive. Again, I'm looking at the futures contract. There's another positive that has also really taken place over the past couple of days. Now, unfortunately, on this system, I've just got the continuous contract, but it's going to be close enough for our work. And the very bottom panel of my chart is showing the price oscillator for the Great British Pound futures contract. And that is a calculation that's looking at the difference between the 39 and 19-day exponential moving averages. Now, that's the details behind it. What's most important to you are the patterns. And the pattern is when this price oscillator gets to the 0 level, and right now it's at 0, or certainly as it's approaching zero, you're always looking for this little red line on the chart. I like to refer to it affectionately as Stevie's red line. It's really what's referred to as the oscillator unchanged line. That's the level where if price is trading right at it, the bottom panel is moving sideways. But the importance here is that when you get a bullish or bearish test as it nears the 0 line, and that's what we have going right now, we have over the past couple of days, it's been at or near the 0 level. Price in essence has come back or pulled back to it, Paul, tested it and rejected it. And what it's telling us is it really wants to make an attempt to move higher and go all the way back to those highs. But I would still, if I were you, I would wait to see this take out the highs from October 13th. And then,
I see what you're looking at.
yeah, and then you've got to run all the way back up into that swing point. So I think you're on the right track with regard to going higher. If for any reason this gets the what kicked out of it, and it gets back below that red line, then that's going to give us a different message. But that different message could be just as you called it, which is this has been consolidating for the last several weeks. So you're correct on that consolidation pattern. I think you're even more correct in that this wants to break out to the upside. I would say let it prove itself to you, because you don't have that much further to go to get above the October 13th swing point high.
I see what you're saying. Thank you so much for that. I really appreciate that analysis.
Hey, no problem.
Hey, have a great weekend. I hope you have a great Thanksgiving, and I'll be calling again soon.
All right, that's thanks. And I see the guys in Clearwater are saying there's going to be one more person coming down, or bring your friends and family.
I'm telling you, I mean, I'm bringing a few people, and we are looking forward to going to check out Clearwater. Absolutely, so.
Well,
We'll be out there
you got to give Tom a call, because if there's a master of real estate in the St. Pete Clearwater area, he's the guy.
He's my man. I'm going to give him a call and get that set up.
All right. Thanks, Paul.
Have
Have
a
a
good
nice
one. Bye-bye.
Thanksgiving. Yeah, all righty. So that was the Great British Pound. And let me just take a quick peek here. Doesn't take too long just to check, see if there was any email requests that have come in. And, yeah, one is here from, well, I see a couple. So let's go take the first one from Tim. He wants to take a look at Lennar. So looking for an entry point. So with regard to Lennar, let's go through our 3 time frame charts. Just look at the daily, the weekly, monthly profiles. Wow, this thing is really broken out. So that's very clear. Now, I say that because price is above all swing points that I can see on my chart, above all tops of boxes, daily, weekly, monthly out here. So that says, let's go ahead and pull this chart back up. Let's go take a look at its price oscillator. Let's go look at Stevie's red line, try to figure out, price has been moving higher, doing a little bit less relative energy, Tim. Let me just take a look at wave counts real quickly. So let's count those up and see, well, you're at wave number 7. Very interesting. Not as Schultz like to say, but as R.D. Johnson like to say. So you're in wave number 7. So you may get a pullback. And that first pullback, Tim, it won't be much. It's about $1.10-11 right now. 59.51 would be an area that I would be watching. So I wouldn't jump on board just yet, just simply because of those patterns. The one stretch pattern, price moving higher, doing less relative energy, and you are in wave number 7. 59.32 is a support level on the daily. 58.05 is a support level on the weekly, and 54.40 is on the monthly chart out here. So. And yeah, I'd say be patient and wait to see if you can get a little bit of a pullback out here. 5.2 million shares was taken out with 3. Yeah, and you had volume moving higher yesterday, but it was certainly lighter volume. So I think you just need to start watching the pullback and watching the volume, Tim, as it does that. Don't jump on the short side. I'm just saying wait to watch for the pullback. So thanks for writing in. Happy Thanksgiving to you and your family. Mark writes in and says, Steve, I'm thinking, how high can the NASDAQ go? It seems like it will never come down. Can it go forever? Mark, it cannot go forever. But what is your definition of forever? Let's go take a look at the NASDAQ, and let's go try to figure out where it's headed. Now, the problem is, in giving you, in talking about where it's going and trying to identify timeframes, let me do this. Let me try to do this for you. Let me see if I can find this. I will be able to find it during this break, and I'm going to answer Mark's question to the best of my ability for multiple timeframes. How high can the NASDAQ go? Now, I don't know if you're talking about the composite or you talk about the Qs. We'll go take a look at the Qs, since that's what everybody trades. Steve Rhodes, TFNN.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the Taz Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back. So we're trying to answer a question for Mark with regard to his question is, how high can the NASDAQ go? Didn't really say if it was a NASDAQ composite or the Qs out here. We're going to go with the Qs, and we'll take a look at the NQ as well out here. So, Mark, here's one piece of information that you and I received yesterday, and that is in the A to B equals CD scenario. What you like to see, you don't have to see it, but what you like to see is a prior swing point get taken out with conviction. In this case here would be volume. Well, the swing point that you and I have to make that decision based upon was November 8th. 17 million shares out at that swing point. Well, yesterday that swing point was crossed with 20 million shares. So higher volume says you now have a confirmed A to B equals CD to the upside. We have that drawn on our system out here. This says, from a daily perspective, the Qs are headed to 160, 162, I'm cutting off the change out here, or 165. 160 would basically be your 1-to-1 A to B equals CD. Is that where price is headed to if, in fact, it's fulfilling the A to B equals CD pattern? The answer is no. Absolutely, positively not. Now, I can't guarantee that, but what I can do is say the way that this structure has formed, no way. Not a chance. It's going to be more than a 1-to-1 A to B equals CD to the upside. I don't know if it's 162 or 165 or a 1-to-2 A to B equals CD, 168 out there. But you have a confirmed A to B equals CD pattern. Do they always work? They don't, Mark. I mean, nothing always works, but that's the information that we took yesterday. Do we have any kind of reversal today? No, we don't. So as far as how high can it go, these are the first levels that I would be watching inside the QQQ series ETF. Now, with regard to the NQ, let's say that we'll go longer term. That was a daily chart. If we take a look at what's going on a monthly basis, what you're going to see are red horizontal lines on my screen. This is in essence courtesy of Bud Rolfe's work, where he was taking a look at primary trading ranges. But the difference here is Bud was doing everything by hand, and he was carrying monthly chart lines over to weekly and daily and lining those up. I don't do that. The reason I don't do that is because I have all this data automated, so the system can go out there and pick out the co-located closes or opens of sessions, and identify the largest quadrant, the largest number of opens and closes. That happens to be, by the way, 2644 and 1466. And once you have those levels, you just add that distance to the top and bottom to come up with your next horizontal trading ranges. They typically act as longer term or shorter term, depending on the time frame, support or resistance. Well, last month, what we had go on inside the Qs was a bust through of a monthly horizontal or primary trading range boundary line, should be significant, and it was busted through. Now, what happened this month, thus far, the month of November, when you break through resistance, ideally, you like to see price come back and test that level. Test and or reject it. Test and reject it if it's going to move higher. Test it and fail to say, hey, that was a false breakout. Well, what we have inside the NQ is a test and rejection. This says to you and I, over the longer haul, and there will be ups and downs, that as long as the NQ stays above 61.75, she or he is headed to 73.52. So in answering your question, how high will it go? Well, this is broken out above a resistance zone. That would be one level. If we then take this into the NQ, and the market is paused today, some will say it's because of a holiday. That could be true. I will say it's because, look, you've got all of these prices. Here's the S&P 500. We'll go back and this are the monthly horizontal trading ranges. We basically hit it, 2606. You can go listen to some other segments of mine where we called out. It's not 2600, it's 2606, where in essence the S&P is headed to and where it's going to run into its next level of resistance. Now, this is really important because if this area gets taken out, just like in the NQ, that's going to provide you with a ton of information. Now, inside of the NDX, this is the only of the indices of those four being SPYs, IWM, or Russell 2000, I should say, S&P, Dow, and the NDX 100. To those of you that believe the NDX leads the charge, well, guess what? It busted through its horizontal trading range with conviction last month. So this says the NDX 100 headed to 67.88. Different numbers, different time frames. Now, this is also a monthly time frame for the NASDAQ. And then ultimately, if I'm correct, what the NASDAQ itself did, the NDX 100, it broke through a consolidation pattern that dates back to 1996. So between 1996 and 2017, you do the math on that. I believe that is 21 years. 21. So 20 to 21 years worth of consolidating. And it busted through that consolidation level back in January of this year. And this says that ultimately, over time, where the NASDAQ 100 is headed to is 88.45. And then I would say, Mark, then that could mark the top. But your question was, how high could this go? And I want to give you the answers. How high could this go? All right, we've got a question that comes in. Could I show the fib 1.618 expansion from 2000 to 2008 of the NDX 100? From 2000 to 2008, absolutely. So if we come take a look at that level, let's get the expansion tool out here. And this is our Fibonacci expansion. So we're going to go from, I've got to grab the tool. So we're coming from the high in March of 2000, and you want to come down to the 2008 level versus the 2002 level? Kind of just saying I would probably use the just for our cases right now. I'm just going to use the lower swing point, September 2002, and the 1.618 level is a price point on that is 77.82. Let me do this here just to make it a little bit easier for you to take a look at. Let me do this so I can change everything to green, and then you'll see the lines out there. So those green lines now that appear on your chart, those are the Fibonacci expansion. So NDX 100 blew through, didn't really blow through it. It took a couple of months where it just simply hung around the 1.272 level and said, I'm done. I've recharged. Now I'm ready to go to the next level. Next level here is 72.82. I don't have the 1 to 2 on here. Well, we can add that. That's a pretty easy thing to do with regard to expansion. So let me come back here. Well, I thought I could do that. Here, I'm just going to do this here. Just change that number to 2. And that 2 level, the 1 to 2 gets us right up into that consolidation measured move level out there in the 88.45 area. So, Mark, I hope that answered your question with regard to, hey, how high can the NASDAQ go? And that's just using, we would do this on any time frame. So what we're doing here is we're agnostic to all the BS stuff, all the before Steve stuff that's on the media and the news and the this and the that and so forth, and just simply using the same patterns that you and I use to call the markets out here. You know, I mean, that's, I don't know how else we can do it. Instead of trying to get caught to one side or the other, it's what's the message of the markets out there? And, you know, with it being Thanksgiving, to me, what Thanksgiving is all about, a number of things, but really when you think about it, it's about the greater good, right? The question is, what's your greater good? Question for each of us. What is our greater good? Like when I do this show, my greater good is to share with you all the best that I can to answer your questions, maybe thinking differently than others out there. And we each have greater goods for different things. Tomorrow, do your greater good for someone else. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So let's do this with our last 2 minutes here. I don't see any other questions, email, inside the Tiger's Den. And earlier during the show, one of our dinners, John, Mr. Z, posted something pretty important, which was, and I think, he did this publicly as well. Rand Gold, AU, and the GDX are moving. Now, we talked about gold and we took a look at the yen. Clearly looks like yen futures are trying to bust out. We know about the directional correlation, so it says gold should continue to move higher. We've identified a level where gold has resistance, a couple different resistance levels out there. And so let's go ahead and tie all this back into the mining equities out here, because if in fact gold is breaking out, the yen is breaking out, well then so too should the mining sector, but maybe not the entire sector. Here's a look at the GDX, looking at the daily, the weekly, and the monthly charts out here. And you can see plenty of resistance. 2320 is one number, 2377 is the other, 2985, not a bad move, is on the monthly. That's on the monthly time frame. So I got daily, weekly, and monthly. Now, if we take a look at the XAU and we use that perhaps instead of looking at the GDX as a guideline, what we're going to notice here is it looks like the XAU has actually completed the A to B equals CD pattern. Now, the price projection here would have been 78.80. Never got down there. Remember, we use these as guidelines. It got really close, didn't get down there. The reason why we suggest that it may have found a bottom was, one, it formed a nice little hammer candle. This is on the trading session. You'll see it right here when you go to the XAU chart on November 15th. Okay, hammer candle near the price projection. That's a bullish move. The next day it gets tested and rejected. Another bullish candle shows up on November 17th. Today you've got a gap to the upside. That is a bullish candle, just as gaps to the downside would be bearish. So this is really telling us that the mining sector is trying to form a bottom. But do you want to go after the entire sector, GDX? Or do you want to take a look at some other stocks? Well, Mr. Z put in there, and you should go do the homework, folks. Go take a look at ticker symbol GOLD. And I will ask you, what did it do today? Steve Rhodes with TFNN. Have a happy Thanksgiving. We'll see you on Magical Monday. Be safe out there. No drinking and driving. Use Uber, even if they're getting hacked. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.